Morning, people. Morning. It's Thursday, April 17th. Uh, let's see what we got going on here. We got some news out of the EU. Talking about competitiveness in Europe, and the proposal has been tossed around many a time now for the past decade, but EU leaders are now looking to see exactly how to move ahead with a single capital market union. The main idea aims to diversify funding sources across the bloc and facilitate cross-border investments. Deepening the single market could also benefit competition across Europe and mobilize a lot of money to fuel the bloc's economy. So, EU businesses are hitting a notable financing barrier in the EU, encountering substantial hurdles in accessing readily available capital to scale up and innovate. European Union Council President Charles Michel told members before the meeting today, hence the Capital Markets Union warrants our special attention and firm guidance. It is imperative that we make significant strides in this area where progress has lagged for too long. The gathering also outlined the need to pool together capital for big-ticket transactions and transitions ranging from clean energy technology to artificial intelligence. At the moment, there are many barriers for local European companies to rival their counterparts in the US and China, especially amid growing geopolitical tensions, waves of protectionism, and massive subsidies being awarded to the world's large economies. So the new plan aims to raise the competitiveness of Europe, replacing oversight of 27 member state capital markets with one single market under ESMA, the financial market regulation for the EU. So there is a rift between larger countries like France, Italy, and the support plan, and smaller countries that have already they already have prominent financial markets like Luxembourg and Ireland. The latter are afraid the new framework may lead them to be dominated by their big rivals and wouldn't give them enough control over their own financial rules in domestic markets. Granting power to centralized supervising authority can be difficult to unwind, even for those who would like to see some kind of greater European integration. There are a lot of stocks actually. Well, okay, let's not throw ourselves out there. There's a decent amount of stocks that are out there that have a lot of great potential from Europe, right? Nordisk, also Louis Vuitton, Moet Hennessy, LVMH, or 1MC, I think is the ticker, Hermes, right? There's a lot of potential for those names that have grown a lot in Europe, and there are like ASML, I think is a semi. There's good diversification with strong growing companies in Europe, and this I think could further bolster those companies that have already excelled, and also bringing forth new companies that can make diversification portfolios and just general asset holdings a lot better for everyone realistically. I have some European stocks I'm looking to add more that have great potential. I know one of my friends was actually looking at Jumbo recently. It's a Greek company. But in terms of other news here, if we talk about semis, the U.S. federal government is speeding ahead with its plans to boost semiconductor chip production. Micron Technologies, MU, is the latest to be awarded a $6.1 billion grant to support its planned projects for advanced memory computer chips in Idaho and New York. The planned mega fab in the Empire State will be the best thing that happened probably since Erie Canal for the Syracuse area, according to Senate Majority Leader Chuck Schumer. As previously mentioned on Wall Street Bets, all grant funding under the CHIPS Act is planned to be allocated by the end of the year. We're also looking at earnings coming out for big tech companies, right? That's the next wave that a lot of people are looking at. The market's currently dropping right now, right? Over the past few days, we've seen a sea of red, especially in equities here. Well, mainly in equities, right? Tech names have been pulling down as well, not crazily, but a decent bit enough. And what we're seeing right now is a move into earnings season. Now, a lot of people are looking at this earnings season as the age of innovation, where we could possibly get very clean results from earnings that will push prices up. I think a lot of people are betting on the reversal based on earnings in the coming weeks, especially in big tech names. So I think Netflix is one of the first ones that reports, and then we got Google is when. I think Google and Amazon generally report fairly early. Well, I guess next week we have Google. Amazon is the week after, I believe. I think Meta usually reports earlier. Meta is next week, so we're going to see a lot of earnings come out with these big tech companies. Remember, Meta and some of the other big tech names like Amazon, they gapped up very aggressively in the last earnings period that bolstered that upside in the markets. So if we see something of the sort where a lot of people are actually leaning on the bull side here, pretty much based on earnings, we're going to see these things, we're going to see this market turn around fairly aggressively, in my opinion. Semis are still kind of down right now, gapping up slightly on today's little push higher, but AMD, I think, is one of the bigger losers here in these chip names. Nvidia is down, but not like super aggressively. And those big earnings, especially out of Nvidia touching the 50-day average right now, are going to give us a lot of indication of where this next move actually lies in these markets. So, speaking of tech, the proposed bill forcing TikTok to divest from China's BitDance or face U.S. ban might get fast-tracked, boosting shares of rival apps like Snapchat and Pinterest. Also to note, Wedbush Securities believes that Meta and Google stand to benefit the most if the TikTok bill becomes law. President Biden recently discussed concerns about TikTok ownership with Xi Jinping, though China declared that a move to divest the app would backfire on the U.S. Recall that the former Treasury Secretary Mnuchin is also putting together a group of investors to acquire TikTok if the bill passes. So yesterday we had a pretty significant downside move, and today we have a lot of Fed speakers. So we have Fed's Bowman and Fed's Williams that should be on the wire like about now. We've got Bostic talking twice today, actually, once at 11 a.m. Eastern and then once at after the bell. So a decent amount of Fed speakers that are jumping on today. Strong move to the downside yesterday as we accepted into levels that we haven't seen in a very, very long time, right? Yesterday we failed to hold any kind of bid with heavy volume on the overnight session, no acceptance into the cleanup of the auction, and what happened is we're pushed back under a new distribution that starts at 50-60 and under. 50-60, I was looking for buyers to get active there. We're at that 50-50. They eventually did, but a tough struggle. And we're trying to pull up overnight, right? Not super aggressively, not super bullish, but as long as we remain above this 50-60, that's the chance that these buyers have to actually come into this market. Moves above 50-80, I think that we're going to get a pretty clean sweep to the upside where the bid opens up fairly aggressively. But we're in a position right now where we're going from distribution lower and lower, so that's putting a lot of pressure on this downside, right? There's mass selling going on, and I don't necessarily think it's continued. If we see some kind of pop today, it's probably going to get faded into next week realistically. Otherwise, we start running under that 50-60 on the S&P 500. We're in trouble to see that downside open up and move into this distribution to the lower end, which finds itself close to that 5,000 level. So let's see how this shapes up. I'm mainly just using a pivot at 50-60. If we can hold it, okay, great. We can look for longs. If we start running back under it, then it's going to be very difficult to look for the long, right? I think the sellers really take over as we start moving through key delta imbalances that shaped up yesterday. And if we start moving under them, right, the sell side's really going to open up and that liquidation starts under that 50-60 area. So let's wrap it up for today. I'm going to open up the live trading room with our team here. I hope everyone enjoys.